The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending the 6th of April, 2018. Well, before I start, a little housekeeping here. I will be doing a podcast probably next week on the 13th. I will be traveling, so I may do it on the 12th. On the 20th, I'll be returning from Puerto Rico and probably will not do a podcast on the 20th to resume on the 27th, although I might do one later in the weekend. It just would be late posting. So let's start right off. CNBC reports U.S. trade deficit rises to a 9.5-year high, and this is all taking place while this quote-unquote trade war is escalating. We wrote all about it in the latest edition that was just posted last weekend in the Morgan Report. Anyone that studies these sanctions on other countries, and wants to put up trade barriers, tariffs, try to balance things out. It never works. It never has worked. And I am not convinced that Trump isn't aware of that. I don't know. I won't speak for him. What I do know is that it's hard to believe that he wouldn't have an inkling of the fact that this idea does not carry weight as far as actually working in the marketplace. Regardless, it's escalating. There's talk about China retaliating, and this will have purportedly, and I agree, a beneficial effect on the gold market. This is from Reuters. Title is, Global Central Banks Can Adopt Negative Rates as a Conventional Tool. People's Bank of China's working paper. This is really hard to believe that this could be a policy decision that's going to work in the long run. Yes, I'm well aware of the fact that there are huge amounts of capital in the debt markets that are yielding a negative rate of return, which means you get back less money than you put in. It's never been attempted before in monetary history, at least that we know of. And yet this working paper saying, this policy can work, and during a deflationary recession, et cetera, et cetera. I won't read the whole thing. I will comment. I doubt it. I don't think that people are willing to put up a long-term deposit with a guarantee of losing money on it, but it has been done, and it continues. And we are, again, pointing out that this is very, very unconventional wisdom that's taking place in the financial markets presently. Moving into the energy sector from oilprice.com, Bahrain says giant discovery holding 80 billion barrels of oil. This is tight oil. It's very difficult. It's not very amenable to refining. And the other thing is 30 billion barrels, I think, is good for 3 months of usage, for 3 months of demand in the U.S., so triple that, so maybe a year's worth of oil. Not saying it's something unworthy. All I am saying that the title of this is just part of the story. And this announced biggest crude oil discovery in history, blah, 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 in this region is really not all it's purported to be. So if you look at it with a critical thinking, you are going to determine that this is something that also shows that we're probably having maybe a tighter oil situation than the oil bears are pretending, because the tight oil situation, the Back and the Eagle Ford, all of the shale are operating at a loss. This is not a profitable situation. So until these companies come to the fore knowing that they're going to have to make a profit, these discoveries are actually detrimental to the overall system. And that is the reality of the situation, although few speak about it at the present time. As I have said many times, there's no commodity more important than energy, and for the most part that means oil. And a great deal of it is used to grow food. This is from the Daily Journal. UN Food Agency urges agroecology to fight famine. Current food production methods are harming the planet while failing to provide millions of the world's poor with enough to eat, the UN Food Agency warned on Tuesday. They say that they would like to have an agroecology which improves soil quality, costs less for farmers, and would help reverse the growing food insecurity. We need to put forward sustainable food systems that offer healthy and nutritious food and also preserve the environment. Ironically, I saw Eating You Alive, a documentary about the food situation and the average American diet, the SAD, Standard American Diet, and it was quite an interesting movie. I would suggest that people that are interested in the health aspects of food and sustainability, etc., what this article talks partly about, might want to Google that and learn a little bit more. It was quite an interesting documentary, to say the least. And I'm going to stay on that theme about health for a minute longer here. UPI, obesity can lead to liver damage by age 8, study states. And this, again, goes along with this movie that I watched last night. But during this documentary, according to their statistics, about 60% of Americans are overweight. And I think half of that were obese, which is really, really sad. It wasn't that way, when I was a 20-year-old or, 40 years ago or whatever. But the point being is that we just really are not taking care of ourselves. There's a lot of reasons for that. I'm not going to outline the entire movie. If you're so interested, you can send me an email. I'll be happy to get back to you. And I decided to come back to the oil situation before moving on to the precious metals. This is a great article here in my view. It's Our Finite World. I don't agree with everything here, but it's certainly thought-provoking is what, one of my missions is to get everyone to critically think. So this talks about the standard idea of peak oil and the real situation. So it's summarized here with the research finding, which the problem with peak oil is problems oil. We're running out, that's the issue. High prices will occur. Wind, solar are good substitutes. And it's easy to reduce usage. This is basically, and I don't agree with this totally again, but that's kind of the summation that he has for the conventional peak oil. The real situation, problem is total energy. I agree with that. Energy per capita needs to rise. In other words, the more energy you have per capita per person, the better their standard of living. And I agree. I mean, if everyone could have, let's say, free electricity as an example, think of what the productive capacity of the entire planet would be. Especially if you got that for free. Prices fall too low. He's making a case there wind and solar have little value. That I totally agree with. I've said from the offset, even though that silver's use in solar is critical and it's been thrifted. In other words, it's more efficient. Solar is not the answer, nor is wind. And collapse occurs if used less. I definitely think this is an article worth reading and probably printing out and studying to a fair degree. It is the most important commodity, and where we're going with it is very, very important for the future of everybody on the planet. The most significant thing, in my view, to come out this week on the precious metals markets was this article, and it talks about how easy it was for traders to spoof the market, meaning putting up trades that they had no intention of executing to get the market to move a certain direction, which is called spoofing, and then withdrawing the order. This can be found on the net. If you just type in COMEX, we have a problem, it'll bring it up. I won't go through a lot, but the basis of this article is what's really been going on, what banks are involved. You can see here Deutsche Bank, USB, AG, and HSBC, and others, Merrill Lynch, etc. Talks about the legend, this trader, and what he has done, which is Andre, and I won't blow up his last name. That's one. You scroll down, it talks about the tyrant, this Edward Basis, and what he has done, the tactician, John, and I won't blow his last name either, the spokesman. So it's a very interesting article. The master, the London Precious Metals Desk Deutsche Bank trader, James Worley, cast himself in the theater of chat as the quintessential English gent with a strong sense of fair play. So all these guys were colluding with each other, knowing what was going on, saying, what they were going to do, and executing said chat on the internet, you might say. And lo and behold, this is overlooked for a very long time. And then, of course, more important probably to all of this is the informant, this David Liu, that basically blew the whistle on this whole situation. Has a little paragraphs here beyond spoofing. Even with the first trial about to start, 4 years since the last of the allegation of precious metals probes continue. The Department of Justice Fraud and Antitrust Divisions opened their precious metals investigations into financial institutions in 2015, but the criminal antitrust probe was closed in January of 2016. The U.S. government agencies were not the only parties investigating banks' precious metals trading, though. The banks defending also civil antitrust precious metals class action lawsuits received an extraordinary boost in the form of letters from the Department of Justice announcing closure of the investigations. Predictably, the letter was used by defendants straight away in an attempt to convince the courts to dismiss the lawsuits. So again, you can go in and read this whole thing. It's definitely worth following. You can follow Alan_W_Flynn, and you can also donate to Alan via the end of this article. So that will summarize this weekly perspective. I will be able to do something next week, probably before I leave, and the following week I may not be able to do the weekly perspective. That is, until next time, David signing out.